Ladies and gentlemen, we are seeing over 500% cost to borrow fees from Interactive brokers. That is the highest that you have seen throughout this whole cycle with AMC. Now, we need to get into everything that's happening here on the day with AMC as well as in the markets. You did get some data that came out. Today was a shorter trading day, and we're going to start up again on Wednesday. So, lots of information here in this video. Hit the like button and subscribe to the channel as well as if you guys want to get yourself free stock, link down below in the description of this video with Woaaah. If you have not signed up, deposit $1, get yourself 15 free stocks, throw a couple free stocks my way, help support the channel, all of that good stuff. Now, AMC was up almost 1% today in regular trading and up 0.67% in after hours. Now, you actually got a downgrade today. Yeah, an AMC stock ripped. I'll call it a rip. It was green, almost like 1.5%. Good enough for me to call it a rip at this point. The stock is uptrending. The stock is doing very well overall. Things could be a lot worse for AMC. And we're really in a waiting game right now. I think there's a big question on how AMC is going to perform after the court decision. Hedge funds, institutions, if you ask them, the stock's going to plummet. But like 99% of them are bearish. So how does that work? Not everyone's going to get paid out here. Not everyone can win in the markets. We're not going to fall like that. At least in my personal opinion, I'm not a financial advisor. Don't risk the farmhouse on what I say. Not a financial advisor. Don't listen to me. But from my perspective here, the way that I am positioning, I expect that we have seen the lows for this cycle. And the low, whether you want to call it $3.77 or $3.80, I don't think it matters. I think AMC is giving us a little glimpse of what we could expect on a much bigger scale after this court proceeding is done. Again, because you crushed the short thesis. There is no short thesis left at that point. Like, there's literally no reason to be short in AMC. Once AMC raises up to $16 billion of liquidity. Now, if we take a look at AMC stock and some of the data here, Interactive Brokers short availability has cost to borrow fees at 500%, 498% to be exact, close enough to 500%. Volatility is ramping up. The shorts are about to get absolutely fucked here, okay? You can see it in the cost of borrow fees. Look at the short interest. Look at the days to cover. Look at any data point you want on AMC. It all leads to the same ending, a short squeeze. And again, back to what I said. Not everyone is going to win when everyone is bearish. That's just not how the markets work. The 1% that is bullish can't lose enough to pay out the 99%. That's usually why when everyone is betting a certain way for something to happen in the markets, the opposite tends to happen. Don't be confused when AMC stock rallies. I know a lot of you guys, most of you guys want that to happen. And don't be surprised when it does happen, okay? Now, as far as what's driving up cost to borrow fees right now, it's the implied volatility. People are making their bets to what's going to happen next with AMC. And it's clear, right? The stock is going to be volatile. At the very least, that you can say with a definitive. You don't have to be a financial advisor to say there's going to be volatility. It's going to move up or down a lot. Pretty generic, right? I like to provide you guys a little bit more clarity on, why I think a certain thing's going to happen. But again, I don't expect much to happen until we get the ruling from the courts. That's when I expect bigger things to happen, right? Now, if we take a look at AMC, AMC is still on the threshold securities list. Not a huge shocker here. You've been on this list for at least a week now. And the way that I look at this is not like you have to see a short squeeze at this point, like something has to happen. It's, hey, okay, shorts are put on notice. The failure to delivers are put on notice. you're going to have to buy back those positions. You're going to see some buying pressure on AMC. And that's what we kind of seen today. So not a huge shocker. Live short interest of free float sitting at 23.2% and 120 million shares that are currently sold short. Cost to borrow average 937.87%. Cost to borrow max 1,060%. Cost to borrow minimum 516.16%. So some very strong numbers really across the board here. Now let's take a look at the option activity. Again, like I said, I don't just use the 99% is bearish. I don't just throw that number out there. That's literally what you're seeing. Positive order value today is 1%. Out of a $100 bill, $1 went towards bullish options and $99 went towards bearish options. On the day today, you've seen 22 orders totaling $5.87 million. It's rough out here, right? It's not bullish. I don't want to come off as, hedge funds and institutions are bullish, because they're not. They're so bearish, it's bullish. And I think that's something that you guys should really remember throughout your trading, lifetimes, right? Or investing lifetimes. When everything seems so bad, that's usually the time to be a buyer. And that is exactly what I am doing here currently with AMC. Now, if we take a look at the Stock Tracker data for AMC, and these numbers can't be right. What is going on with Stock Tracker? You have calls in the money, 0. 0 calls in the money. 33,000 calls out the money. 213 puts in the money and 0 puts out the money. These numbers are not true. These numbers are not right. July 7th and July 14th have very low option activity though, especially for July 14th. So if you do see, more options ramp into AMC, which I suspect you will, as we're not really expecting to get a ruling from the courts this week, it will be next week where you see more options head into AMC, and that could affect AMC quite dramatically. If you see more calls coming into the stock, that's going to give you that upside move. If you see more puts heading into the stock, that's going to give you that downside move. And that's, something to consider at least over, the next couple of weeks here. Now, if we take a look at the economic calendar, bigger data is to come, but today you did get the ISM manufacturing PMI. Now, manufacturing PMI came in at 46. You were expecting 48. So a little bit worse than expectations. ISM manufacturing employment came in at 48.1 and you were expecting 51.3. Construction spending month over month, you were expecting 0.9%. The forecast was 0.6%. ISM manufacturing prices came in at 41.8 and you were expecting 44. ISM manufacturing new orders came in at 45.6 and you were expecting 45. So basically across the board, deceleration in manufacturing. We've seen this over and over again. Basically every reading is down from the prior reading. This is what the Fed wants to see. Now, bigger economic data that we're going to get on actually Thursday is going to be a little bit more important for our markets and what the Fed needs to do as far as their rate policy. Now, FOMC minutes come out 2 p.m. on Wednesday. This is a transcript of the last Fed meeting, and it will give us a little bit more clarity if there's new details here about, potentially, new information, if Fed members agreed or disagreed or who descended or anything of that nature, or who is close to descending, that could move the markets. But FOMC minutes typically give you a strong initial reaction, and then the markets kind of rebound after the FOMC minutes, because usually there's a bit of bad news in there, but it's not bad enough to kind of take over the market sentiment. Now, on Thursday, you're going to have a very big data point, And this is the JOLTS job openings for May. This will come out at 10 o'clock in the morning. Last month's rating was 10.1 million job openings. Now you're expecting 9.9 million job openings. This is what Fed Jerome Powell refers to in terms of a soft landing and reducing supply or demand of labor, essentially, to cool the labor market. Fed Jerome Powell says this can happen two ways. People either lose their jobs and the unemployment rate goes higher, which is not good for the economy, or job openings go down and less businesses are looking to hire employees. And that also keeps people working, but it puts pressure on wages, right, to not continue to go higher. If you don't have to pay people more and you don't have to entice them to work for you, then generally speaking, that's very disinflationary. So if job openings come down more than expected and come under 9.9 million, you're definitely going to get a positive reaction in the markets. Now, JOLTS job quits for the month of May. You're expecting 3.71 million, so there is quite a bit of turnover still happening in the labor market, so something to watch as well. Now, ISM Services PMI for June, you're expecting that to come in at 50. Previous reading was 50.3. So anything under 50 is contractionary. This would be the lowest reading for services in a while. The lower, the better for services, as that has really been the stickiest part of inflation so far. Now, Friday morning, 8:30 in the morning, you're going to get the unemployment rate for Canada for the month of June. You're expecting 5.4%, an uptick from 5.2% at the last month's reading. Now, 8:30 in the morning as well, non-farm payrolls for the month of June will come out. And we've seen a weird divergence happen last month where you actually added 339,000 jobs, but the unemployment rate went from 3.4% to 3.7%. Very weird moves in the data. So I would expect there to be more weird moves to come. Now, you're expecting the unemployment rate to be still at 3.7%, but to add 250,000 jobs. So we'll see what happens with this data, where things do ultimately go. I think data will be important this week, but tomorrow markets are closed for trading. We'll probably have a video coming out tomorrow, especially if there's developments over this weekend. I would look forward to that video, especially as we do start Wednesday. It's almost like we had an extended weekend at this point, because really a half day on a Monday is quite strange. So that's going to do it for this video. Again, to bottom line it, AMC, you're seeing cost borrow fees jumping exponentially. AMC was green today. Everyone is so bearish. It's bullish. Don't be confused. Just because everyone else is bearish does not mean you should be bearish. But again, I'm not a financial advisor, not a financial planner. I'm literally drinking black coffee out of an M&M coffee mug. Okay? So don't feel obligated to listen to me. That is it. You guys enjoy the rest of your day, and I will see you in the next one.